Ladies and gentlemen, good afternoon. My name is Ken Koyama, Chief Economist and Senior Managing Director at the Institute of Energy Economics Japan. It is a great pleasure and honor for me to join 2020 Energy and Mineral Resources Development Symposium. Today, I am very happy to share my views on the outlook and challenge for the world oil and gas LNG market, with a special focus given to the impact of COVID-19 pandemic and climate change policy. Let me start with this slide showing the viewpoint of the world energy market under the pandemic. Firstly, we need to ask a question if and when the ongoing pandemic can peak out. This is a very difficult and serious question. Of course, including myself, everybody in the world are seriously hoping that pandemic should be peak out. But given the reality surrounding us, including many countries in Europe and in Asia, including Japan, Korea, China, second and third wave is now we are facing the serious second and third wave of the pandemic. Under the circumstances, global economy is suffering most serious situation since the Great Depression in the 1920s-30s. And in terms of energy, oil and gas market, the issue related to the city lockdown is more serious, more impactful in terms of demand reduction. And because of this serious implication from the lower economy and lockdown, we experienced the demand evaporation of oil market in particular, and also same in gas, coal, and electricity market that resulted in the serious oversupply and lower prices in all energy commodities. And of course, lower energy price created the demand-supply responses in marketplaces. But so far, the lower energy prices, including oil, gas, LNG prices, had a big impact on energy investment and industry performance, and negative implication on many producing countries. And furthermore, we need to ask questions about the possible structural change caused by the pandemic. This simple chart illustrates how the COVID-19 pandemic can affect the global oil demand based on IEJ analysis made for this year. The message is very simple. If the pandemic, we can see the end of the pandemic or peak out of the pandemic, next year, the global oil demand can recover fairly substantially. But if there is a second wave or a third wave, shown in the dotted red line in this slide, global oil demand continued to stagnate. And so far, no one can be so sure when and what timing that global oil demand can recover to the level in the 2019 and 2019. So under these circumstances, uncertain circumstance, there continue to be a strong pressure from the uncertainty of the course of the pandemic and the global economy and the possible city lockdown, which now we are seeing in some of the European countries. And of course, because of the reduction in the oil demand, supply side already had a very strong responses. OPEC plus countries agreed to cut almost 10 million barrels per day from May this year. It's a historical, most largest scale supply cut down to address and to respond to the enormous oversupply created by the demand evaporation. And in addition to this strategic supply reduction by OPEC plus country, economy works. Extremely low oil price, in particular at one point in April, we all remember that WTI recorded the minus $37. It's an extraordinary event. But in any case, that the lower price of oil resulted in the very difficult situation for the high-cost oil production, symbolically in U.S. shale oil production. Before the pandemic, everybody in this industry expected that the U.S. oil production can increase by about 1 million barrels per day for this year. But after the pandemic and after the oil price declined very substantially, now industry people believe that the U.S. oil production will decline by 0.6 to 7 million barrels per day for this year. So the net result is 1.6, 1.7 million barrels per day reduction caused by the low price backed by the pandemic. So in addition to the strategic cut and reduction caused by low prices itself is the main source for the market to react to the low oil prices. So after May this year, oil price, as we all remember, they gradually increased up to the level of around $40, $45, but nowadays sometimes at the $47, $48 per barrel in terms of Brent. And much depends on the future course of the pandemic, global economy, city lockdown, and production from the U.S. shale oil. And also, very important issue is the decision made by OPEC Plus, coordinated supply cut. And many people believe that next year, if the current market circumstance continues, the demand level may surpass oil supply level in the global market. But at the same time, because of the uncertainty of the global economy, the pandemic, many people are very, very cautious about the oil price range. And if oil price goes up beyond $50, $55, $60, it is quite possible that the U.S. oil production can resume its increase again because of the very unique nature of the U.S. shale oil production. So we need to be very careful what's going to happen under these extremely difficult certain situations. The situation for gas and LNG is very similar. For this year, demand for gas LNG was heavily affected by the pandemic. And future of the demand for gas and LNG, it depends again on the economy and the course of the pandemic and other factors. But we all remember, even without the impact of the pandemic, the year 2020, this year, we believe that the global LNG market will see a substantial oversupply. But because of the implication or impact of the pandemic, the potential oversupply volume was further escalated under the pandemic situation. That's why the spot LNG price in Asia, shown in the orange line, declined very substantially up to the summer this year to the level of $2 million BTU, which is a historical low price level. And interestingly, after this $2 as a bottom, the spot LNG price rapidly increased due to the fact of the growth in demand, for example, in China, and also some supply problem happening in the major LNG production capacity in Australia project or some other project. So spot prices reflected the market responses, demand increase, and supply problem. But overall, this year's LNG price, both in terms of the spot prices as well as the LNG price linked to JCC or crude oil indexation declined substantially. So we can call this year as a low LNG price year. And low energy prices, low oil price, LNG price, what that means for the industry and producing countries. And clearly, International Oil Company, IOC, and National Oil Company, NOC, both major big players are seriously suffered from the demand reduction and low prices. They need to reduce costs. They need to streamline their operation for survival. So under the circumstance, they are forced to reduce required energy investment. So overall, in industry-wide, around 30% necessary energy investment was reduced. And if and when the pandemic situation continues to be serious, this very difficult situation for industry may continue. Under the circumstances, energy investment continue to stagnate. What does that mean? When everything goes back to normal, pandemic peak out, we may see that oil and gas and commodity demand, energy commodity demand goes up again. So when demand goes up with the lack of necessary investment, we may see the tightening of supply-demand in oil, gas, LNG market in the mid-term future. Another point is the economic deterioration in producing country, for example, in the Middle East. Because of the low price, because of the reduced demand and forced production cut, their economic situation was very serious. And furthermore, they themselves are suffering from the COVID-19 expansion inside their countries. So this economic and social difficulty may highlight the risk of potential political and social instability. So under the circumstances, current ongoing low prices or oversupply situation may be a source of future instability in the oil and gas market, which is a big implication for many countries in Asia, Korea, Japan, China, which is very much dependent on fossil fuel import. Another important issue is a structural problem caused by the pandemic. First question or first issue should be very, very important, which relate to the peak oil demand. As I mentioned earlier, because of the pandemic, in short term, we experienced the demand evaporation. Everybody stopped moving, and because of the reduced demand for transportation, oil demand, oil product demand, gasoline, diesel, jet fuel demand declined very, very substantially. And to other alternatives, we use teleconference, web meeting, etc. to replace the actual demand for the movement, transportation. So depending on the circumstance, oil demand peak may be accelerated together with the effect of climate change policy, enhanced climate change policy. And this peak oil demand can have a very serious implication for the industry. And as I mentioned, one of the key issues is electrification. The reduction of oil demand can be accompanied by the increase in the electricity demand. Even without the impact of the corona, many energy analysts believe in the long run, electrification can be accelerated. But the effect of the corona-related social transformation can be the source of further acceleration of electrification. What that means? And then we need to ask questions about the impact of the corona on the decarbonization or carbon neutrality, or whatever. And also there's a very interesting question about the relation between post-corona recovery and decarbonization, which now we are seeing as a big experiment is made as a case of EU Green Deal. And also under the post-corona circumstances, geopolitics on global energy market will attract a big attention. We are seeing that a very serious tight situation between United States and China, and the post-corona political and social transformation may also affect the future course of geopolitics of energy. And all in all, the ongoing energy transition may be affected by the implication of the corona, and also under this situation, we need to ask questions about the technology supremacy. The advanced and innovative technology will play a key role to affect the course of global energy transition. This chart simply illustrates that there are many possibilities about the future demand for oil in the world. As you can see, some of the representative long-term forecasts now indicate there is a possibility of oil demand peak, in particular rapid oil demand peak. But we need to understand this may be caused by the post-corona transformation, but also the impact of the climate change policy is very serious. And of course, under the circumstance, we need to pay attention to the advanced technology for the transportation, like EV, FCV, and other very important technology development. But once peak oil demand can happen, it has a big implication for the oil market, in particular for the economy of oil-producing countries. Even now, OPEC Plus countries are trying their best to restrain their production since this May. And it is possible under the corona situation, they continue this production cut until next year. But long-term peak out, oil demand peak out, may suggest that this situation may continue for the longer-term period to protect the price. So it has a very big implication on the market. And as for electricity, as I mentioned, electricity is going to be more and more important. But in my view, there are 4D challenges in the electricity sector: decarbonization, deregulation, digitalization, decentralization. The question is, these 4Ds stand in sometimes that a trade-off relation. It's a very complicated situation. Under the circumstance, electricity price affordability and supply stability should be more and more important when electrification can be accelerated. And furthermore, that the large-scale increase in variable renewable, the issue related to cybersecurity, all other new emerging challenges for the stability and affordability of electricity. And furthermore, we need to understand, this year in particular, we are seeing that the wave of carbon neutral target. Of course, everyone knows that the EU continue to argue that carbon neutrality is very important, and they are now trying to achieve the target in the year 2050, together with a Green Deal for corona recovery. But now, China joined this carbon neutral target at the year 2060, Japan carbon neutral in 2050, and I understand that the Korea also carbon neutral in 2050. And if we will have a Biden administration since next year, United States is also joining this carbon neutrality group. And the EU, China, Japan, Korea, United States together account for almost 60% of global CO2 emission in the year 2090. So if these countries are really going to carbon neutral, it has a big implication for the world of climate change. policies. Under the circumstance, everybody is so keen about the innovative technology as a solution to carbon neutral or other environmental challenges together with energy securities. In particular, now hydrogen is attracting global attention simply because hydrogen is another very important zero carbon energy and can be produced from various sources such as green hydrogen, blue hydrogen, yellow hydrogen, etc. And also hydrogen can be used for many purposes, not only for power generation, transportation, heating, industrial, it can play a big, wide role. And in particular, from the viewpoint of fossil fuel producers, like Middle East oil producers, one of the possible best utilization of their fossil fuel resources in the long run under the decarbonized world, production of blue hydrogen can be one of the possible, very important strategies. So under the circumstance, Japan is now working very, very hard together with many oil producers, including Saudi Arabia, to create the international supply chain of blue hydrogen. And as a first step of this long-term strategy, we are now working very, very concretely about the blue ammonia. I think that this should be a very, very important challenge to address climate change as well as the global energy security. We are already now in the global energy transition. 20th century is called the century of oil, and still the oil accounted the largest share in our global energy portfolio. But clearly the share of oil is declining, so we are seeing what's next after the century of oil. To do that, to understand what will be the next winner, we need to understand the importance of addressing the environment and energy security problem, technology development, in particular the innovative technology. So I think as factors to affect the global energy transition, we need to pay serious attention on the possible impact of post-corona world transformation, as well as technology supremacy, because advanced and innovative technology will be a key to form the global energy transition in the years to come. I'll stop here. Thank you very much for your attention. And again, I'm very, very happy to be here today. Thank you very much for your attention.